Good morning, everybody. Welcome to the Flow Show. It's FOMC day, the day we've all been waiting for, apart from yesterday, the day we were all waiting for. Morning, Stel. Morning, Kay.
Hello. I made it.
You made it.
Yes.
Hope you didn't break get any speeding tickets.
We will know soon, I guess.
No, in 3 to 6 weeks.
Yeah. All good, mate. All good.
Good.
So,
Morning,
is everybody
Kay.
ready for today?
Yeah, all set, and that's what we're going to do today. Get our final preparations done. You all right, Kay? Having a good day, mate?
Yeah, all good. Yeah. Good morning, everybody.
Enjoying the weather? Enjoying the heat wave?
Yeah, it's still pretty okay inside my office, but I've put on the fans,
Yeah, I'm thinking I'm going to need to get my fan out as well today. Keep the old computer cool, let alone me. And I'm sure it's going to be a hot day today in terms of what's happening in markets. So we shall crack on with the latest news overnight and from yesterday. Starting in China, as we often do, they went and cut their overnight, 7-day and 1 month SLF rates, each by 10 basis points, following on from the prior cuts they've made to some of their other rates. They're likely to cut their key policy rate and loan prime rate at some point in the future, according to Chinese press. We have the medium-term lending facility rate decision this week, likely to be a cut there too, so it looks like 10 pips all around on that one. Of course, we continue to wait to see if we get a big reserve requirement ratio cut. That's the big rate cut, which probably nailed on, I should think, given they're cutting everything else along the way. They set the midpoint for the one at 7.1566, just a touch up from 7.1498. So no signs yet that they're putting any sort of brakes on the currency. As you can see, we continue to nick fresh highs, although we're running into a bit of traffic up here in the high 716s, 17s, up towards that 18. So things might just be easing off up there for the moment. Barclays sees a China rate cut every quarter through to early 2024. So you see them going on a big easing spree, as you like. Coming over to some of the data, we'll look at the US CPI in a moment. Just looking at some of the data that we've had through this morning. Starting off in, I haven't got it there, German wholesale prices. There we go, those there. Came in down 2.6% year on year. Were expected to fall a bit further, 3.3%. Didn't fall as much as expected. It did fall further than expected on the month. So these are wholesale prices, so all makes up the inflation basket there. So more negative numbers in both the monthly and the yearly numbers there as prior, but now they're growing, and we're seeing that in some of the PPI data as well. Industrial production out from the Eurozone as well, not looking overly great. Came in as expected at 1%, which was an improvement on the minus 3.8% last month. Year on year, a bit of a lowly 0.2 versus 0.8 expected. UK GDP numbers came out, and the month-on-month number for April came in at 0.2% as expected, again on last month. Year on year running at 0.5% versus 0.6 expected. So nothing really, as we know, going gangbusters, but nothing looking too bad either. Industrial production, though, looking a bit worse year on year and on the month. Same for manufacturing, not as bad as expected, but still a negative there. So more mixed data coming through on that front. Construction in the UK on the month down 0.6% and lower on the year than expected and prior. So mixed batch of data coming out from there. We heard from new girl Megan Green yesterday at the BOE. She was at a confirmation hearing, and we were looking for just to see what her leanings are, whether she's real hawkish or dovish or centrists in down the middle. Not too much to pick out from her comments. She said the UK is seeing some second round effects in inflation. It's reasonable to expect inflation to come down fairly quickly. You could construe this as a touch dovish by saying there's always a risk of over tightening given the lags, and BOE is aware of this. We do need to go slowly and deliberately with QT to avoid financial stability risks. So sounding a touch cautious there as well. This one did sound a bit hawkish, depending on how you took it. If you engage in stop-start monetary policy, you can end up with a worse outcome. So that might be a nod towards the likes of the RBA and BOC, who paused and then hiked again, and that's what is largely expected from the Fed. So you can take that as her saying she might rather get rates where they'd be happy to get them to and then pause, rather than doing a stop-start policy. BOE's Bailey was out as well, and surprisingly, the pound didn't fall after he'd finished speaking. He said labour supply is recovering very slowly. Food inflation is taking a lot longer to come down than we expected. Inflation will come down, but it will take longer. BOE's Dingra, one of the doves, said there's little the bank can do to cut short-term inflation. She's only just woken up to that fact, apparently. Policy transmission is likely slower than before. The economy is starting to recover from large supply shocks. So nothing really strong from any of those BOE members ahead of the meeting next week. And I think, counting the days, they all go into their blackout period from now on. So they'll all be shutting up until next week, thankfully. Traders now see a 50% chance of the BOE raising rates to 6%. You remember yesterday we were talking about expectations now for 5.7% rates by February. Now there's pricing a 50% chance rates get to 6%. I think when we start talking those sort of numbers, as mentioned yesterday, we possibly get into extreme pricing for BOE levels. It wouldn't be a surprise if they had to take rates that high, given the stickiness in inflation. But I think as far as the market's concerned, if we start pricing 6 or plus % rates, we will be getting to extreme levels. And that's something I'll be looking to counter via the quid anyway. Bank of Canada are apparently going to raise rates in July by 25 pips, according to 20 of 25 economists. In a Reuters poll, 5 say they will hold at 4.75%. Right, let's take a look at yesterday's data from the CPI, which pretty much cemented a pause. I think numbers were pretty roundabout as expected. Core CPI coming in at 5.3 as expected, confirming the dip from 5.5. The headline CPI a pip less than expected at 4%, but again confirming roundabout the numbers there. There was really limited moves, you could say. I mean, the dollar yen had a little bit of a flip-flop right around the data. If we look at the shorter term chart, nice 100 odd pip swing right about in there. Bit of a crazy move. And then it sold off a bit down to 139s and recovered. And we're not that far off where we started going into it. So it pretty much cemented, in the market's mind anyway, a pause from the Fed tonight. But we're still pricing a hike in July. Expectations were pretty low for a pause anyway. So I think they were about 5-7% in the chance of a hike. That got completely washed out yesterday. So here we are. This is where the market is going into the Fed tonight. One thing from the data that I would want to point out is looking at the real average earnings, particularly the year-on-year numbers, which are just not shown on that calendar there. They came in at minus 0.7% versus minus 1.2% prior. year on year. Average hourly earnings were up 0.2% versus minus 0.6% prior. So wages on a real basis continuing to fall. Obviously, as inflation falls, that gap is going to narrow. But on the hourly numbers, we're still seeing positive numbers. Still, we're not seeing any sort of wage spikes or spirals like we saw with the UK data yesterday. So there's nothing there really to worry the Fed and may get them, turning a bit more hawkish. What did you guys make of the data yesterday? A bit boring in the end, wasn't it?
Yeah, I wrote on the chat room, my expectation is for 0.1 lower in both the core and the headline CPI. Well, we got one out of the two. So just like Meatloaf says, 1 out of 2 ain't bad, or close to. But overall a dud. And the worry that is going to now slowly come to the Fed's mind is the core, which, as you know, excludes high volatility items like energy and housing, I think, or whatever it was. Yeah, and that really needs to come down for the Fed to feel more at ease with pausing. So that is a little bit of a worry. I still think both the headline and the core are going to grind lower, but of course it remains to be seen. But overall, it was a non-event, and I don't think it changes anything in the way the Fed are thinking about today's meeting. I find it almost impossible that they hike. Nothing is impossible, obviously, but very low probability scenario. Why would they want to shock the market? Is there any reason for them to do so? I don't think so. But they can easily do a hawkish hold. And but I don't think yesterday's number gave them any reason to do that. So I feel like even though the Fed should be theoretically hiking a little bit more, I think they're going to grasp on any chance they have to be on the dovish side, because let's face it, like you said, with the UK rates at 6%, you're getting to levels where it's really going to start suffocating the economy, and in the US as well, with rates where they are, we're already seeing some signs. And remember, the banking crisis, the regional banking crisis, is not that far away from us, and more and more signs will come as long as monetary policy is tight. So they know very well that they really shouldn't be tightening more if they want to avoid causing some kind of a recession or even worse, a crisis. So to summarize, and I know I say things in a very roundabout way, but I think the Fed is going to pause today. Do I think it's going to be a skip or a pause? I still think that even though it shouldn't be, I think they're going to bring it in such a way that they actually make it a pause, complete pause. So I don't think they're going to be hiking next month unless we see the CPI, the next CPI print, which is before the next meeting, spring a positive surprise. So that's my view.
Thanks, mate. Kay, what did you make of it yesterday?
Agreed.
Thank you. Moving on.
Nice. Moving on.
That's it. I'm moving on.
Okay.
Sorry?
No, go carry on, mate.
Yeah. Well, I mean, we can't do anything else than agree, really. There's going to be a pause. I'd say 90%, and then 10% a surprise. Perhaps we can never rule out a possibility, although it's extremely unlikely that they're going to hike. But let's not completely discount it. I'm not sure whether it's the end of the road, though. I still think there is a possibility for one more, unless then the core continues to come off to at or below the Fed funds rate, to make sure that everything is in positive territory, because that's what Powell really wants. For the rest, I do think it could be a kind of hawkish pause, but whether it's going to have a big impact on the dollar, remains to be seen. For the time being, the dollar is coming off a little bit, barring versus yen, really. But that's more of a carry trade, and the China is a different issue as well. The one is more a carry trade, the other one is more monetary policy easing, and also between Blinken and the Chinese. He's supposed to go over there next week, I think, on the 18th. But the start of the start wasn't really very promising. Just Blinken complaining about China and China telling them to mind his own business. But yeah, I don't think that there's going to be a big impact on the dollar, but that means that we may just continue to do the same as we do now. That is, carry trades doing well because inflation is gradually coming off elsewhere, so the emerging market currencies are doing better. Yeah, so we have to treat every dollar a bit differently coming up tonight. But we said CPI had the possibility of being a bigger mover than the FOMC. Now I'm thinking that ECB will be a bigger mover than the FOMC. So I'm flipping from one side of the FOMC to the other side, really.
Yeah, sounds good, mate. Sounds good. Yeah, I'll just chop through the rest of the headlines, and we'll talk a bit more about the FOMC. Treasury Secretary Yellen said that it's our obligation to rebuild the Treasury balance to a safe and appropriate level, talking about refilling the TGA. They will try to design Treasury offerings to be most attractive to market participants. I don't know what she's going to do there. Maybe offer toys like they do in McDonald's, buy a bond, get a little toy. Who knows? But she also said she should expect a slow decline in the dollar as a reserve currency. It's been a bit of a topic this year, what with China stepping up and everything going on with Russia, about whether the dollar can hold as a reserve currency. And she's saying we should expect a slow decline in that. So maybe a little bit of a warning there. On the oil front, according to Bloomberg, the US will plan to buy 12 million barrels of oil for its reserves this year. We know they're already doing it in 3 million barrel clips, as we've spoken about the last couple of tenders that are happening and going out. So another couple of tenders for the rest of the year is likely. So 12 billion is the number they're putting on that, according to Bloomberg. And on the geopolitical front, some less than positive comments coming out from Putin yesterday. He's confirmed the cancellation of a cooperation agreement with Ukraine on the use of the Sea of Azov and the Kerch Strait. That's the bit that goes through from the Azov Sea through the Crimea. So he's closing that up to them. Also says we are considering a withdrawal from the grain deal. Again, this is all part of tightening up over this counter-offensive. And probably most worrying is that he says we will use weapons with depleted uranium in response if necessary. So a bit of a step up in threats there. That sort of thing has been on the table, but he's knocking that about in comments again. So we still have this risk bubbling on under the surface. And with this counter-offensive by Ukraine, it does potentially increase something bad happening over there. We can't do anything about that. It will know as soon as the headlines hit, but keep that in the back of your mind when you're trading, that this thing is still going on and it is still a pretty big deal. Right, so coming on to the Fed, I pretty much share the views that these guys have. But I don't think it's going to be as dovish as a lot of the market expect. The one issue I've got is that the market expects them to pause this month and then hike next month. And my point would be, well, if you've got a reason to hike next month, you might as well hike this month. If you're going to pause, you're going to pause for a period of time. You know, you don't want to be doing pause 1 month, hike next month, because for one thing, rate changes don't filter through that quickly into the economy. So either you've got a reason to pause and pause for a period of time, or you've got a reason to hike. And if you've got a reason to hike, you might as well hike now. So if the Fed pause, I think it may sound hawkish in terms of they'll be ready to do more. They definitely won't shut the door on further hikes. Whether they indicate that they'll hike again in July, I'm not sure. It'll be strange. But what they will want to do and what Powell will want to do is keep the message in that rates are staying higher. If he gives an inch on that, then the market will take rate expectations down. We'll see assets prices coming down that are rate linked, if you like, so yields, for example. And what they won't want to do is let the market undo a lot of the rate hikes by pricing of those assets. So I think it's going to be hawkish on that basis, in terms of keeping this higher for longer, not declaring that the fight is over on inflation. We've still got a pretty strong jobs market, or very strong jobs market. The rest is looking okay. We know that manufacturing is a bit poor. Services is doing okay. What will be important tonight will also be the talk on tightening financial conditions. That might be a key reason for the pause. It might not necessarily be inflation. It might just be natural tighter financial conditions. So that might be a reason that they pause, which suggests that they will continue hiking if that eases. So what we're going to have for the price moves then? I still think that some of the trades I've been looking at are still particularly valid. I was hoping for stronger CPI yesterday just to give me a dip in dollar China. I still think this is probably going to be my preferred trade to look at over this, considering what the Chinese are doing with rates. So again, I'll be looking for a decent dip if one is presented over the FOMC to buy into. Probably asking a lot to get down to the 711, 712s. So I may look down maybe around the 714, 715s, maybe something like that, depending on where we are going in. This might be a sort of last chance to grab something on the dollar side if we get a dip. Euro dollar is another one I'm looking at to perhaps run into the ECB again. I was hoping for a dip in this one, but not much one came along. So it might be looking at trading a break up through maybe this 108 to 108.30 area. See if we get a move up through this zone here. But again, I'd prefer a dip in this one more than anything else. Cable, I know a few of our guys in the chat room, I know Kay's probably looking at this one as well. It's made the break of 126. It's holding the break of 126. Again, this could be a good candidate for a dip buy if one comes along. What are you guys looking at anything in particular? Any? I know you've got your options on, Kay.
Yeah, I mean, well, I've got this $114 yen, and I've already been starting to fool around with it to try and get some of the premium back. Got a little bit of downside of euro dollar, but I don't know. I don't know if that's going to work out today. I think that's more likely, if it has to work out, that it will work out tomorrow. But for the rest, I think you really there's a theme now about carry trade, and there's a couple of other themes, and I'm not sure that FOMC will change much. So sterling is a wanted animal. I agree. I think there's going to be good buying of sterling if we see dips. I've got something around 125.80. Yeah, there's a bit going on in this zone here, but I've got something around 125.80ish, and then 125.40. I think 125.40 is there as well. That would be a decent level if you look at cable, if you want to trade dollars. Yeah, and then the rest. I mean, if they keep their hands still as we expect, I don't expect much to change on the carry trades either, because it won't disrupt the dollar or yields too much, because the market is already not expecting them to move. So then we just take the same and continue. I think yeah, buying dollars China dips, that is still at the order of the day, I think. There's one that's a bit worrying because I tried twice. It didn't cost me any money, but I tried twice to buy dollar rand, and it doesn't work. So it seems carry trades are playing there as well. We are back below 1850.55, which was a bit of a decent level. It could be a pre-FOMC stop run, but I'm going to keep a close eye on that one. If the dollar picks up strength, that should be one that should start to find bottom somewhere. Yeah, but then for the rest, as I said, I mean, I think there's a lot about carry, sterling being good, and I guess if I'm right in saying the carry is going to continue to work, is that on the Bank of Japan, if they confirm that they don't change anything on Friday, albeit it's possible that they start to talk about some stuff that but if everything stays equal, then I think the yen is poised for another leg lower. So that's kind of the base ideas that I'm having right now.
Yeah, I'm sure you can look at Guppy in greater detail, but that could be another one that could be off to the races after tonight. Again, another one might be worth picking up on a dip, because if you're talking about the carry, if the Bank of England's getting to 6% and Japan's staying at absolutely nothing, there's a decent carry trade in an economy that's not looking too bad at the moment.
Yeah, you could actually, if they start to talk about something about normalizing, we know it's going to be slow, but we know the market will react to any comments of that. But we'll talk about the Bank of Japan later. But if they start to talk about something, the market will react to it, and that's probably going to be your opportunity to get long sterling yen again, or something else in yen. I don't know.
Yeah, no, exactly. Stel, you got anything you're looking at in particular?
Ahead of the Fed. Not too much. I agree on being a buyer on dips on the cable. Well, I've said before, I like. Actually, I can show some charts if you want.
Yeah, do you want to take them? Yeah, cool. That'd be.
Yeah, I think it's a good time to do that. Okay, I got it. So, okay, I'll talk about cable and all that. But I'll start the way I always do. So yields, I'm waiting for 390 or so, which we're getting there. You know, could we get here? Could we get there with the Fed today? Yes. You know, if it's a hawkish hold, I think that's a target. And these are levels now, 390 to between 390 and these highs 409. I think these are great levels for me, at least. It looks that way, to get long the treasuries and short the yields. And the rationale for that for me is that I do think that inflation is going to keep going lower, maybe not at a hugely fast pace, although the last drop on the headline was 0.9%, right, from the last reading. So it's still doing a relatively good job. And I think that the Fed will be going on hold, well, this meeting for sure. And I think that it's more than 50-50 that they're not going to hike again. I know I sound crazy by saying this, but I've sounded crazy in the past saying other stuff, and some of it has worked out. So that's my view. And I think, although I think that a lot of the rate cuts are going to get moved further out the curve, I don't think that the Fed's going to be cutting by January, unless there's some kind of big risk event or crisis or some sort. But I do think overall that it's a nice round figure, 4% in the, or close to 4% in the 10-year. And I think it's an area where I want to start getting long some treasuries. It's been a very, very long time since I've traded treasuries to the long side. But I think that's going to be something that I'm going to be looking at very closely. So currencies. Well, the dollar is not looking too strong at the moment. We discussed this with Steve yesterday on the Morning Edge. He still thinks it's a kind of a corrective move on the way to another leg higher. I'm not sure about it. As I said before, I think the Fed's going to be not hiking as much as well. I think they're going to be on pause, so that will definitely bring weakness, or at least downward pressure to the dollar. Could we have one final leg up? Yeah, we could. Up until very recently, I thought 105 or 105.5 was the ultimate medium-term top. I really don't know if we're going to get there now. So we wait for the Fed today. But overall, the dollar is not looking too hot. And really, the Fed has to be non-dovish for this to turn higher in any shape or form. And remember, 100 spot 80. I know it's not that close yet, but that's the level, and it's a huge level. So I am a seller of rallies in the dollar. Cable is one that I really like. We talked about this. It's actually gone more sideways than I hoped, but the economic data in the UK is still pointing towards definitely divergence in central bank policy compared to, say, the Fed or even the ECB. Second round inflation effects, probably going to be seeing those a lot more. We saw average hourly earnings, or whatever they call them in the UK. They have another name, don't they? Anyway, it rose more than expected year on year, and so the pound is one of the currencies I like. Euro pound, I mean, I'm still bearish this thing, and technically it just looks not good. And we are testing these recent lows now, and really I still think the target is 83 to 83.5, and that's where I'm going to reconsider. Another currency I really like to be short dollars is the USD CAD. I talked about this yesterday on Face, and it's broken, and this was a very important trend line, I think 8 touches or something like that, and now it's gone down. Of course, we have the Fed today. Could if they come out hawkish in any way, this could become a big false breakdown. But I don't think that's my base case. So I think this is going to be a proper breakdown. It's another pair I want to be a seller on rallies. And but overall, the Fed could change everything. So I say all these things today. Tomorrow I might be saying something very different, because if the circumstances change, we need to change with them. Okay, so equities. Let's play the tape from yesterday. It's no reason whatsoever to be bearish stocks. Not yet. There is sentiment is changing. You are getting really high DSI readings in equities, really low DSI readings in VIX. You had the Barron's cover saying this is a new bull run. This is all stuff that should be making you a little bit wary, sorry, and wary or weary? Wary. So I still think this is... Sorry?
Nervous.
Yeah, that's the one. So I still think definitely wouldn't want to be, I wouldn't want to be short these, because they just keep going. But the time is coming to be short. First, I'm going to need some evidence, some technical evidence that we are turning. I think 4,400 is still now the next target. And remember, we were talking about this when we were trading around 4,300. We said, 42, 320, 30, there's going to be plenty of stops there, and there's going to be FOMO. So what have we seen? 3 really strong days, and it's exactly what happened. I know it's not a huge amount of points, from 43.20 to 755 points. It's not a huge amount, but it's gone in a straight line, and it keeps going. So not bearish in any way yet, but I think the time is coming slowly. The DAX is interesting because we are now at all-time highs. Round of applause, everybody. No? Okay. All-time highs is 16,331. We are at 16,331. So do you short something that is hitting new all-time highs? Absolutely not. Similar story as in the S&P. I think the time will come, but for now, I would strongly suggest, you do, guys and girls, do whatever you like, but really trying to go against this, I think it's pain. So I would wait for confirmation to do anything like that. Other risk assets, cryptos, what have we been saying? Underperformance, and look what we're doing. 4 indecision candles so far, and really, is there anything bullish about this? No. And comparing this to the equity charts that we saw, the indices, there was nothing bearish about those, and thus nothing bullish about this. So underperformance will probably continue. If you want to be long risk, I really don't see why you should be long cryptos. If you want to be short risk, probably not a bad thing to be short, because Bitcoin is about, what, 600 points away from lows, which were also the previous highs, and it's also a fib. I mean, this 25 to 25.3 is absolutely huge. So you're a lot closer to support than you are to resistance, and it's underperforming. So if you want to be short something, risk wise, I mean, probably this is the one to be. Having said that, the caveat is that these things, for me, very difficult to assign intrinsic value to them. So a headline can move these 5-10% or more without anything else happening in the world. So be careful when trading these ticking time bombs. Look at Ethereum. I mean, Ethereum is a lot closer to the lows here. Just doesn't look good in any way, no matter how I look at it. So if you're long these, I would suggest you have very, very tight stops and try not to get burnt. It's actually a similar story with gold. It is trying to hold these lows, but it's really lingering here now. So this looks dangerous to me. I've said that for a while. I think it's a 50-50, maybe even a more than 50-50 chance that we have one final flush lower in metals. And perhaps today's Fed will be the trigger for that. You know, if the Fed is in any way hawkish, metals are the first to get absolutely slaughtered every time. So these lows, 1935, let's say, we're very close to that. If that breaks, I think we're going to 1840. So 100 points below. So my medium-term view, you know, it's unchanged. I think we're going a lot higher, because if you look at, you know, the way gold has been consolidating over the past 3 years, it's a very, very bullish consolidation, especially if you consider from this, you know, in this area here, last year and a half, there's been massive tightening, you know, rate hikes, QT, you name it, they've done it. And look at gold, this is absolutely strong as bull. But we could go back down to 1840. That would still take us to the middle of this range. It wouldn't be a disaster technically in any way. And it's still a possibility. So I would be, you know, I'm bullish, but you have to know where you're wrong. And below 1935, I think, or 1932, whatever those lows are, I think that is cut and reconsider. Silver is a similar story. I still think low 22s is the more than 50-50 chance of them getting hit. Maybe the Fed today will cause you know, a move lower and a continuation. But for silver as well, I think it's one of the most undervalued commodities out there. The big picture still doesn't look bad. It looks worse than gold, but then again, on the way up, silver always outperforms. So you have a lot more ground to make up when metals start going. And they will start going, because inflation is something that always, with a lag, pushes their price higher. It's economics 101. Short term, there's a lot of forces pushing them this way and that. But in the medium term, I have no doubt that this is going a lot higher. I have a full position unleveraged in the silver, and I'm probably going to be adding more at 22 if we get there, provided that nothing major has changed in the global environment. That is it, I think.
Thank you, mate.
Yeah.
Just on this silver,
yes,
or on the metals, I'm just reading right now an article saying that China is convening urgent meetings on economy with business leaders. If you look at if China starts to really put in place strong measures to revive their economy, of course geopolitics will play a role, but I've also seen that Ken Griffin is starting to be more positive on China. If they do so, and if it comes in well, of course, if China gets back online more, or the economy goes better, it will be a bit inflationary, but it will push commodities up and stuff. And I think then that's if we get those kind of signals in an environment where inflation may just slowly continue to come off elsewhere, then stuff like silver is really going to get that kickstart, I reckon, to start flying again.
I agree. China is a huge driver for silver,
Yeah.
absolutely. And what gets me is that, when inflation starts rising, for some reason, this is a bad thing for metals because they're going to be hiking rates. Well, it just makes absolutely no economic sense. Everything
No,
I've learned in my life makes no
yeah,
sense to be selling commodities because of inflation. It's
yeah.
absolutely no sense. But this is a short-term reaction. We have to accept it's always happened. But
I, yeah, I
don't-
think that the way of trading and the trading models have been adapted, and this way of thinking is at times going to come back, and then it's gonna kick in fiercely. But for as long as stuff is muddling on or directed by shorter term impulses, I
and
think we
the
have
machines too, right?
machines. But that's
Yeah.
exactly it. I mean, the biggest funds, active funds are model funds now, and they do everything via machine. And perhaps we should ask Chat GPT what's going to happen in the next weeks or two. No, but at one stage this thing will kick in, and I completely agree. As you know, I'm long a bit silver as well. I'm managing it a little bit more active. I'm not yet full steam, but anywhere 22, 21, I'm ready to load up much more if they put it down there just for the after when China will come really back online. So yeah,
Yeah.
I agree. And for the time being, it's just a case of being a bit patient and go with your levels. If 24.5, 24.60 go again, perhaps then add a little bit and see how it goes.
Absolutely. Absolutely.
Can I throw in a bit of a counter to the China thing? Because
No.
for China to do well, the rest of the globe has got to be doing well as well, hasn't it? Because obviously China is a big exporter to the global picture. So if we're muddling along at plus minus 0.2, 0.5% in all the global economies, how is that going to help China kick into gear
Yeah.
outside of their domestic front?
I think there's with China, it's always going to be in waves. Now we are in this wave about the countries trying to de-risk from China, not decouple, de-risk. So we have this wave of anti-China, some a bit everywhere with the global economies. But the global economies are actually okay. They are muddling along, but they are not falling out of bed yet. I mean, if you look at it, we are mid-end June, and we were expecting recessions to kick in start of this year, even last year, and now we're pricing in recessions for the next 12 months. There's also a lot more money in the system. I don't really agree with the argument that it's going to be very difficult. It only takes a little bit of growth, and of course it would be better with 2-3% growth. But I think that if China is really going to make sooner or later an effort. Now there's problems with the Russians, with wherever they are, and with the and against the Americans, and with Taiwan and stuff like that. But they will find a way commercially to attract the people again, in my opinion. But I mean, it was just a correlation between silver and that I was talking about, really.
Yeah.
I don't know when it's going to happen, but I think that commercially they will find a way somewhere, and it only needs. It's like, I'm going to compare it to what Buffett did in Japan. Buffett started to invest in Japan a few years back, small amounts, but then last year, September, October, he started to be more vocal about his investments in Japan, because he bought himself into those big trading houses, and it started to make he doubled his money, or even for some of them more than that. And then all of a sudden, what happens to the Nikkei? Nikkei flies like 10, 15, 20%. Why? Because some of those big investors are interested in a country. And then you get, as Brand says, the herd diving into it. And you remember, that's already, I think, a month back or so, the biggest European asset manager said that they were relatively optimistic about China. They were too early, far too early. But then now today, Ken Griffin, who is a big investor as well, is saying is Citadel's boss, right? He's saying that he's optimistic on growth in China, and then I think it was yesterday or the day before that Morgan Stanley says that China could actually beat economic expectations right now. I mean, if that starts to filter through, in my opinion, they're all early. They're all too early because there's more. I mean, on the currency side, but we have seen the same thing in yen. I mean, you buy Nikkei, but the yen comes off. And I think it could be the same for China for a while, so that the CNH is still going to come off on the back of it. But be careful what's happening in the asset markets in China. When they get their act really together, then you're going to see a kickback. But so I think the argument is of it that the rest of the world needs to grow. It's like, to me, it makes me think about the Coca-Cola thing. Nobody knew about Coca-Cola. It was a medicine, but then you create the demand. And I think the Chinese are clever enough to at some stage down the road, I'm not saying today, down the road, I think they're clever enough to create that demand.
No, I agree. I agree with that. Yeah, I think the global picture, what's happening elsewhere, is a part of the China story. But I think you're right. I mean, I think the de-risking from China is going to come to a point where everyone's going to go, well, everyone's de-risked, and now we've got no exposure. Now everything's cheap in China, and we see it go the other way. And you're right. Then the investors start getting in. But I agree with you 100%. We know they can pull themselves out of any bogs they're stuck in. And you know as well as I, if we see that dollar yuan up at strong levels and we see the economy turning around, you and me are going to be front of the queue for selling dollar China and riding it the other way. But and it's all about the timing.
I mean, that's the thing. I was thinking about something, but then I was reading Mike's comment and I forgot what I was going to say. But and the Europeans already said that they wanted to de-risk but not decouple. And then you have Macron, who was already in China the other day, saying we have to make up our own mind, not blindly follow the US. So if China gets back into more European, closer to Europe, then I reckon that's going to be pretty. It's going to be there, you know. It's not going to be completely pushed back against. All right, then.
I will give you back the screen, Ryan.
Thank you, mate. Right, do you want to take a little look around, Kay?
I can, but I think Stelios already shared quite a bit there, so I'm just going to run over just a couple of things. I don't know whether this is valid. It's only a 2-point line, but it comes from the high in the cable after 2020. Okay, and we are trying to break above. Of course, this is the more important one that we tested, 123. That's more medium term. But then if you look at a little bit closer for tonight, there's already a couple of levels here. I wouldn't. Perhaps it's worth on a close, but I would rather look at these levels here, the prior highs around 126.60, 126.80 on the cable to see where the close is tonight after the FOMC. This may be a little early, 125.75, but then if you look at this prior double top that we broke and then retested, went back down just a little bit on Friday, toying around, then we came back here. There's this trend line. I think around 125.40 we are already going to see some buyers if cable comes back down there, because the market will already start to look forward to next week, Bank of England as well. And even though this morning's data in UK were a bit mixed, I still think that they show enough to say that we are avoiding recession here in the UK right now, and it won't change the global picture right now for sterling. So I do think that if there is bit of hawkish Fed taking cable back down. We should find some probably some support around this 125 40 zone, low 125s. Then and that's what I'm thinking. But the more important ones to me are euro sterling. You know, euro sterling is trading back to those prior lows. And I think this one is going to be important tomorrow after the ECB. If my hunch is correct, then there would be room for moving lower. But again, it's a hunch. I'm not saying that this will happen, but I just repeat here. I think this is the last hawkish Lagarde meeting tomorrow. But I'm taking a big risk in saying it. But also I have to say what I think, right? Not what
people want to hear.
Say.
Yeah. No,
okay.
I agree with you on that one. Actually, I'm still looking for a decent rally in that one tomorrow over the ECB to sell into for the BOE on euro sterling. But it does look like it's any lower, doesn't it? Towards those 85.
We could get both. You know, we could get both actually. That you see a small hawkish Fed today, taking dollar just that little bit higher, then the market is probably going to counter trade that on selective basis, right? I still say on selective basis because this not all currencies and not all dollar pairs are equal in today's markets, and then we will see that, but that will be, I guess, a little not too long lasting, and then we see tomorrow the other side where ECB hikes and you have the dollar getting sold off, or the euro rally in some pairs, thinking about perhaps a blip in euro sterling, a bit of euro yen, bit of, I don't know, euro Canada, euro Aussie, and so but I think that they are the opposite side. And I think the market is going to take the opportunity to hammer it afterwards, and especially when Lagarde is going to talk. So again, still pleases to say I may be completely wrong, but that is my base case. I think Lagarde she won't be hawkish for longer than needed because it's against her nature. That's my view. Right, sterling yen then, choo-choo train. Now we're well above those 175. I think this is now your first zone, right? If it starts to come back, we're broken above this one. It was a wedge or so as well, but I think the more important one is the top side here. It's close to where we are now, although we are already nearly at 177. But I think for as long as 175 holds here now, this is still looking very much up. I've started to move up my stops. Well, I've started to actually put stops in place because I didn't know where really to put them. But I think the first, I'm quite some way below 175. But I wouldn't like in the short term these to trade below 175, or we may be in for a deeper correction, which would be a bit logic because the market is not going one way, but I think over the Bank of Japan and then combination with Bank of England next week, this could actually continue to go. If the base ID of Bank of Japan stands still and Bank of England raising, supported by the data, this could go higher. And I think I'm probably, if I get it before the Bank of England, I'm probably at least most of what I'm left over with is 180.5. I kind of like it. Some other people are looking at this one, the 1.168 extension around 182. I'm not sure we're going to get there. So if we get it up to 180.5, I'm going to be a happy man and at least take a big chunk of what I've got off. That for the sterling yen. What else am I looking at? Well, yesterday we had a bit of a setback here in the euro NOK. Very fast move down. The Crude oil is ramping higher, but Brent is ramping higher. Gas prices are high. Commodity prices are higher, so that's very positive for Norwegian kroner. I unfortunately missed this whole move because I only noticed it well after the event. Okay, well then we are in the correction time. Then this 11:48, we are a little bit below right now. It could be that we are going down to 11:40 here. Let's put a quick there you go. So we are at the 23, we're nearly at the 23.6. So low 1140s on the Euro NOK will be your first pretty important zone. If we start to close back above 48.50, and the correction may be over. But the market is quite positive right now, helped by higher commodities, better equity markets. That all is since the Norwegian kroner is a risk currency as well. That all is helping the Norwegian kroner right now. And so perhaps this is one to keep an eye on then over the FOMC tonight, because if Norwegian kroner is strengthening a little bit, well, I'm going back onto the day. If Norwegian kroner is strengthening, a move back, where are we now? We are trading just around 1060. If you get back around 1070s or so, into the 1070s, there may be a decent risk reward perhaps to try and catch a top if it goes. 1050 should be a bit of a tough nut to crack, but instead of like selling the drop, perhaps wait for a bit of a setback, which could actually mean that we are building something like this in dollar NOK. Interesting. Showing this dollar rand, you know, we're having two breaks here, 1880, and then yesterday I tried to catch a knife here. Luckily, I did manage already a little bit, and then today, breaking below this this support trend line here, I gave up on this position right now, because it seems that the carry trades are overpowering nervosity around ESCOM and everything in the rand right now. I don't think that sooner or later we are going to find a dip, but a bottom. But it's a bit tough to counter trade this right now. So I would prefer these levels to break again and hold before getting back into it. MEX, whoa, we are through these 17.25 levels. There is a bit of a low from 2016 here around 1106 or 7, but 1725 is already going to be a bit of a resistance here in the dollar mix now, and we are through this downward channel even. So any move back up to 17 heights, 1730s, 1740, 45, I think is already going to find some resistance. And I'm looking at the clock. I think I'm going to leave it there. I don't have much running on the euro dollar. We're turning around the 108. We need to get back below 107, 25, 35 to trade lower. And I think we possibly, if the market really wants to sell dollars, could get a bit of a move up here into the high 108s. But I'm not a big fan of trading euro dollar as such in the cash right now. And I give it back to you, Ryan.
Thank you very much, mate. Right, well, all the talking is done as far as we're concerned on the Flow Show. Obviously, you can join us on Face later. But I hope we've got you all set up and raring to go for the FOMC tonight. Please trade safe. If you're not sure, let what happens happen, and come in afterwards and pick up the pieces, any moves, any levels that you like after that. Thank you as always to Kay and Stel for their input into the Flow Show, and we shall see what's happened tomorrow and go over it all. So thank you very much. See you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.